Hello, everyone. We made it through the 2024 election. I know it was a crazy election. A lot of people, probably half the country right now, is furious, and the other half is ecstatic. I won't bore you with the political side of things. I want to strictly talk about the taxes and what this means for you, whether you're an individual, a family, or a business owner. So, now that President-elect Trump is, here to stay, it's very likely that we're going to see his tax proposal be put in place, especially considering the fact that he now controls the House and the Senate. Putting forth any sort of new legislation will likely be met with very little resistance. So, for those of you who may not be familiar, in 2017, when President Trump was in office, he put forth the 2017 Tax Cut and Jobs Act, which was a tax overhaul. And that was set to sunset, which means it was set to expire in 2026. So January 1st of 2026, all those tax changes would have expired and reverted back to the previous tax code. Now, it's safe to assume that Trump being in office now means that that sunset is likely just going to be eliminated. And those tax provisions that were put forth in 2017 will likely be made permanent. However, there are a few updates that I want to share with you, and we'll quickly just highlight some of the other provisions that were implemented back in 2017. So, one of the websites that I absolutely love for any sort of tax law or tax changes is taxfoundation.org. And this is from their website. They put forth a kind of a bullet point, made it very simple and easy to follow along. And we're just going to go over some of the key items here. So let me just bring up the highlighter so you guys can see. So the first thing is the rates and the brackets. For many of you, you got a tax cut. And the tax cut is essentially just saying your marginal tax rate is going to decrease, and that's going to stay the same. For the most part, all of these are going to stay the same. And one thing for California residents, which is huge, unfortunately, is the salt tax is still going to be have a cap on it. So let me explain what that means. SALT is state and local taxes. That's just the acronym means. And so if you are in California, you probably have very high property taxes. The cap right now is $10,000. So if you're paying, let's say, $40,000 a year in property taxes alone, you only are able to deduct $10,000 of that. Now, there are ways to get around that. If you are a business owner, that's Section 199. That's the pass-through deduction. That's going to stay in place. But if you're not a business owner, unfortunately, California residents, you're still met with that kind of what we would call low threshold. And unfortunately, that's likely going to be here to stay. Now, moving forward, I want to talk about one of the other provisions that are very, very important, especially for my higher net worth community. So, this is the estate tax. And the estate tax, as it stands right now, is we'll call it $14 million. It's technically 13.99, but we'll call it 14 million, and you'll just double that if you're married. So $28 million. What that means is if your net worth is under this amount for an individual, or if you're married under this amount, then everything that you leave to the next generation, whether it's your kids or whatever, gets paid to them completely tax free. Every dollar above this gets taxed at 40%. Okay. So let's say you have, let's just use an example. Let's say you have a $30 million net worth and you are a married couple. You can give away $28 million of that to your family completely tax free. That leaves $2 million left over that's going to be taxed at 40%. And so you're going to have, we'll call it an $800,000 tax bill. All right. Now, what was supposed to happen was that that was going to expire, and that would lead to the estate tax exclusion being dropped down to half, roughly half. So it would have been 7 million for an individual, and then 14 million for a married couple. So we were getting ready to do quite a bit of estate planning, estate tax planning for individuals who kind of fell in the sweet spot. Good news is you are likely going to see that estate tax made permanent. So $28 million here to stay. Another component of this is the bonus depreciation and R&D expensing. So bonus depreciation, for those of you who may not be familiar, is very pivotal for business owners who are going to buy equipment, whether it's machinery or vehicles. There are certain thresholds that the vehicle must pass, specifically being 6,000 pounds or over. But what that means essentially is that if you were to purchase these things for your business, you would be able to write off 100% of that price in the first year. This was set to sunset, meaning it was set to expire at 2026. But that's again likely going to go back up, which is great news for business owners. R&D expensing, research and development, that as well is going to be higher. Let's just go over to some of the other key components that I think are huge. So, exempting tips from income taxes, exempting Social Security benefits from income taxes. This is huge because if you've ever become a client or have ever gone to one of my workshops, we discuss how you can eliminate your Social Security from being taxed by certain tax strategy. Well, that looks like it won't be necessary because of the fact that President Trump will likely just eliminate Social Security taxes as a whole. Also, exempting overtime pay from income taxes. So if you are receiving overtime, all that overtime income will be completely tax free. This one was brand new. He went to Detroit and had obviously a big auto industry in front of him, and he mentioned the fact that he was going to deduct auto interest. So this may help people who are looking to purchase used cars or new cars in the fact that you can write off the interest. He's going to eliminate some of the green energy subsidies. Remember, he is all about deregulation, and the Inflation Reduction Act actually added to our inflation. And a lot of these regulations he is set to eliminate. Wind energy, things like that, he is not a fan of. And then tariffs. So tariffs, I'm going to quickly talk to you guys in detail about, but for now, let's just go through the bullet points. So he's going to raise the current Section 301 tariffs to China to 60% and then imposing a universal tariff on all US imports to 20%. Now, let's talk tariffs here. Tariffs are not my area of expertise. I vaguely remember learning about them in econ class, but it's just important to know that President Trump is a negotiator. He's a deal maker. He is likely going to use this as a negotiating tactic. And the 60% or 20% is just the placeholder for now to start from. He's mentioned the fact that he would raise it to 200% or 300%. Likely never going to happen. But again, we have such a massive trade imbalance with specifically China, but also many other countries. And in my opinion, bringing in someone like Trump that could potentially alleviate some of that trade deficit and bring some of that capital back to the United States would be a good thing. Now, we'll have to wait and see whether that pans out as he has hoped it would, or if it leads to economic and geopolitical turmoil. But nevertheless, we'll see what happens. Now, with that, guys, a couple things that I want to just end on. So first, we were meeting with a lot of our clients in-house to discuss with them some tax planning strategies going into the end of the year. Now, we had two different buckets. Bucket one was essentially if Democrats took hold, we were going to see some tax increases. So we were going to do quite a bit of tax planning on the front end, knowing that taxes were going to go up in the future. With President Trump, it's very unlikely that taxes are going to go up, at least in the short term. Ultimately, I think based on our overall trade deficit and just overall budget deficit, I think in 20, 30 years, it's safe to assume that tax rates and marginal tax rates will increase, but in the short term, they likely won't. So a lot of those planning strategies that we had have modified. And that brings me to my final point, which is your situation. So if you are an individual or a business owner and you are thinking of some creative ways that your CPA hasn't brought to your attention, reach out to us. We focus on tax planning strategies. We'd love to sit down with you, go through your unique situation, see if we can help you out. I'm accredited investment fiduciary and obviously legally required to work in my client's best interest. But With that being said, we do get very aggressive with certain strategies if they make sense for your situation. So with that, thanks so much for watching. I hope you guys found some value in this. If you did, please like and subscribe. We're going to get a lot more active on this channel. I took a little break, but we are back, baby. And thanks so much for watching. We will see you on the next one.